Hi, I'm Andrea Graves, Director of Operations at the Retirement Education Center. And we want to thank you for tuning in to our Retirement Education Center Tuesday Tips. We created our Tuesday Tips in order to provide you with quick, simple ideas to help you reach your retirement goals. For additional concepts on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
Hi, my name is Carson Graves, President and CEO of the Retirement Education Center, and I want to welcome you again to our Tuesday Tips, where today we're going to be giving tips for turbulent markets. So this video is going to be appropriate, right? Because we know that we are suffering a down market right now. And so we want to talk to you about how we get our clients through markets like these. Now, I've been a financial advisor for over 20 years, and I can tell you, no matter how much we express to individuals that these markets are inevitable, nevertheless, when the market starts to go down, people do get anxious about their money, and for good reasons. We all understand that. I myself am an investor, so I get that losing money is not going to ever be fun. But if you have the proper tips and tools in place, you can ride out a turbulent market with a lot more ease. So stay locked in, as we're going to give you 5 tips that if you just implement these, you're going to have a better outcome in a turbulent market. So now the first tip that I want to give you when it comes to a turbulent market is that you need to go back and revisit your financial goals. The thing that we always want our clients to do is to take a risk evaluation. You can use our personal link here, and it's also in the description section below that you can go to and click on this color or money risk score and take a risk assessment. Now, you may think you're a very aggressive investor, but nevertheless, after taking this risk assessment, you may find yourself understanding that you're more of a balanced investor, or maybe you're a more conservative investor altogether. So this is going to be key to help you understand how to stomach a turbulent market. Next thing that we're going to have you to do, if we're working with you, and if you're working with your advisor, this should be important as well. When do you need this money? Do you need it today? Do you need it 5 years from now? Do you need it 10 years from now? That is a very important question, and that you should have an answer to, because if you need this money right now, yes, you should be making changes right now. But if you need it 5 or 10 years from now, you should perhaps stick with your plan. And if you don't have one, that's going to be critical also. The next thing is that you need to know how much are you needing to pull out of your investments. So yeah, you may need this money right away, and you may need to start pulling money out of that investment right away, but you need to absolutely understand how much do you need to pull out, because perhaps you don't want to pull out more than necessary and subject yourself to sequence of returns risk, where you're pulling money out and the market is also taking down your portfolio values. So the one thing you got to do first is revisit your financial goals. So the next tip that I want to give you today is to make sure that you understand how to diversify your assets. Now, many people have heard this many times. Diversification is key, and that's true. But one of the things that people do not keep their eyes on is the concentration risk of their portfolio. So you may think that you're diversified, but you're heavily weighted in a certain sector, like the technology sector. You're heavily weighted in financials or healthcare. So you have to know not only if you're diversified, but if you're concentrated in a certain sector or asset class, or if you just own one particular stock or a couple of stocks. Never a good idea, no matter what you're doing. Now, in good markets, overly concentrated portfolios, the gains are going to be amplified. But in down markets like we're in now, the losses are going to be amplified. So you have to be careful about this here. Make sure that you have a healthy balance of stocks, bonds, annuities, and cash equivalents in order to make sure that you can be properly diversified and have uncorrelated assets that's going to allow you to ride out these turbulent markets. Tip number 3, focus on the future, guys. You can't focus on the now. If you focus on the now, you may end up making a bad decision, right? If you focus on the future, it can help you avoid impulse decisions, pulling out of your positions and getting into cash. If you do that, you may end up missing some of the best days in the marketplace because you're trying to do what? Time the market. That brings me to the other point. You want to take advantage of dollar cost averaging in this type of market because you're betting on the averages. That means you're buying on a systematic basis, a certain amount, maybe it's $100 a month you're putting into your 401k, 200, 500. You want to continue to do that because you're going to be buying more for less. The market is on sale right now. And so when the market turns around, what you're going to be in the position to do is that you're going to own more for less, and you're going to be able to reap the benefits of a bull market when that takes place as well. So make sure you take note of that. And what does dollar cost averaging really do for you? It's going to, one, remove the emotions out of your thought process about your money. You're just continuing to do what it is you know you need to do based off of your long-term financial goals. Secondly, like I mentioned, it's going to prevent you from trying to time the market. Never a good idea. Many studies have shown that no one long-term has been successful at trying to time the market. So perhaps you're not going to be able to win that way either. So make sure that you look at tip number 3 very carefully. Tip number 4, in a turbulent market, you're going to want to protect your money. Now, I'm not talking about annuities, and I'm not talking about putting money in cash or bonds or anything like that. I'm talking about not being susceptible to the fraudsters and the scammers that are out there that's going to prey on your emotions. They're out there in all market conditions, but especially in a turbulent market. You may be more vulnerable to those high sell pitches of, buy now and get guarantees, risk-free, 30+% returns. You got to be careful about that. One of the ways to help yourself out tremendously here is to work with a registered professional or a fiduciary advisor. Now, I know that we teach on this in our classes, and of course, my clients are sufficiently protected because I am a fiduciary. But if you are looking to buy into these types of guarantees or whatever returns they're promising you, you got to be very careful if that person is not a professional or not a fiduciary, because they may not have your best interest at heart. And my last point that I want to point out, of course, it's not my least point, never, is to get a financial plan. Look, getting a financial plan is critical for a turbulent market because it can help you understand, one, what are your goals doing? It'll keep you on track. You will know exactly where you're heading no matter what the marketplace is doing if you have a solid financial plan. Also, it's going to lower the risk of failure for your retirement goals. Many retirees, of course, fail to reach their retirement goals because they fail to have a plan in place. A plan will help lower the risk of this actually happening. And of course, as we mentioned many times in this video, it will keep your emotions at bay. And I just make one last note. If you do have a financial plan in place, you will be in a better position to ride out these types of markets in a more peaceful way, like many of my clients. So I hope that this video gave you some tips to help you understand how to ride out a turbulent market. Please note that these videos are created for educational purposes only. You should always seek out your own financial advisor, tax advisor, and attorney regarding your personal situation. Also, if you are looking for a fiduciary financial advisor to help you with these types of complex financial matters, we highly recommend that you utilize the link in our description below and schedule a 1-hour free consultation with us today. Also, remember to subscribe to our channel, like this video, and share with others.